Hi, my Bitcoin followers! We've seen Bitcoin hit a new all-time high price, regulatory talks with potential to have big impact on the industry, and more institutional buy-in from major companies. All the while, people's interest in crypto has skyrocketed this year. It's a hot topic not only among investors, but in popular culture too, thanks to everyone from long-standing investors like Elon Musk to that kid from your high school on Facebook. But questions arise, is Bitcoin hype or future? So guys, in today's video, we will be taking a brief look on this statement. Is Bitcoin hype or future? Without further ado, let's begin. Despite its frequent depiction as a gold coin, Bitcoin and all other cryptocurrencies are just code. It all began in 2009 when an anonymous person by the pseudonym Satoshi Nakamoto announced he had developed a peer-to-peer electronic cash system that prevented double spending. It all sounds a bit technical, and it is, but the bottom line was blockchain technology securely transferred cryptocurrency from one person to another. It created a permanent transaction record and ensured that money couldn't be spent by the same person more than once. Blockchain is the network, and Bitcoin is the currency. You settle currency on the blockchain, which is no different in practice from a ledger, from the MasterCard network, or the clearing system from banks. When you send a Bitcoin to another person, you use a private key to sign over your right to that virtual cash. No central bank is required to facilitate the transaction, which places cryptocurrency squarely outside the system and ultimately democratizes their use. Anyone can buy some. What's more, you remain anonymous when you sell Bitcoin. In fact, your identity in real life is not connected to your Bitcoin ownership. Despite the passion of those who have purchased Bitcoin and dozens of other virtual currencies that have arisen since then, cryptocurrency remains for the most part a closed-loop system. A Bitcoin inherently holds no value except for what someone is willing to pay for it. And because it's hard to pin down a value, given its volatile ups and downs, it would be difficult to price a product or service accurately in a cryptocurrency. In other words, they face a lot of obstacles and broad usage in the real world. There is no payment rail, says Jason Cousins, co-founder and CEO of Glint. A payment rail is a payment network, like those that facilitate bank transfers or mobile money apps that facilitate payment between people regardless of the currency or where they're located. The payment rails don't want to work with the cryptocurrencies because of the risk, Cousins says. The very nature of cryptocurrency relies on some sort of proof to say I own it or you own it. When that's done, it's settled. It takes somewhere between 10 minutes and 4 hours to settle a trade with Bitcoin. When was the last time you had to wait for your money to be approved before you could take a bag of groceries home? If someone were to use Bitcoin to buy a cup of coffee, for example, and walk away with the trade not yet settled, the shop bears the risk if the trade, cash for coffee, doesn't settle. There is a price to that risk, Cousins says. And while some options are emerging, including prepaid credit cards you can load cryptocurrency to, users pay a higher interest rate to account for additional risks the vendor is taking. Even the 2010 purchase of 2 pizzas, which is widely recognized as the first time someone bought an actual product with Bitcoin, was done by sending Bitcoin to another person within Bitcoin network. That person then ordered pizza from Papa John's with dollars and had them deliver it to the purchaser. Since then, a few online vendors have started to accept Bitcoin as a form of payment, but given the volatility of the currency, some argue it makes far more sense to hold on to Bitcoin in hopes that it will spike again than it does to spend it. If you're enjoying the video, then make sure to hit that like button and subscribe to the channel for more interesting videos about Bitcoin. A company that missed out on a continued Bitcoin appreciation could face dire consequences, including acquisition by a Bitcoin-invested rival. Obviously, investing in Bitcoin is one sure way to avoid missing out on capital gains on Bitcoin. But that hardly makes it a wise investment, especially when one weighs the potential returns against the high risk of material capital losses. Equally far-fetched is the idea that cryptocurrencies could provide solutions to problems often encountered in emerging economies. It is true that, unlike conventional fiat money, which includes central bank digital currencies, CBDCs, decentralized private cryptocurrencies like Bitcoin are not at risk of being overissued by profligate governments. It is also true that the risk of overissuance is greater in some emerging markets than in most advanced economies. But overissuance of currency is just one possible threat to emerging market financial stability, and removing it does not suddenly make Bitcoin a reliable store of value. Quite the contrary, Bitcoin's price volatility since its inception in 2009 has been staggering. On March 29, 2021, the price reached US $57,856, some distance below its all-time high of $61,284 on March 13th, with a market cap close to US $1 trillion. According to a note from JP Morgan on February 17th, its 3-month realized volatility at the time was 87%, compared to just 16% for gold. Similarly, a recent study finds that Bitcoin's price volatility is almost 10 times higher than that of major fiat currencies, such as the US dollar against the euro and the yen. Moyo also suggests that Bitcoin could facilitate remittance to low and middle-income countries. But this ignores the fact that Bitcoin transactions are notoriously inefficient. Because its block size is capped at 1 megabyte and the block discovery process takes approximately 10 minutes per block, only 7 transactions can be completed per second. Visa executes an average of 1,700 transactions per second and could feasibly handle more than 65,000 transaction messages per second. By design, Bitcoin is simply too inefficient ever to become an efficient medium of payment. Similarly, the fact that Bitcoin's supply is fixed at 21 million units is more of a drawback than a selling point. A proper currency should be able to undergo a massive expansion in supply when circumstances demand it, such as in the case of a financial crisis or a shock of aggregated demand. There can be no lender of last resort or market maker of last resort capable of systematic rescue operations with Bitcoin and other decentralized cryptocurrencies. The next decade could prove its importance in Bitcoin evolution. Revolutions within the financial ecosystem apart, there are a couple of areas in Bitcoin's ecosystem that investors should pay close attention to. The democratization of printing money through mining has been sacrificed for the efficiency of massive mining farms. Bitcoin technology is afflicted by scaling problems, resulting in a long history of forks and altcoins. Citi said Bitcoin could be the currency of choice for international trade. This comes as both PayPal and Tesla made investments in cryptocurrency in early 2021. Tesla bought $1.5 billion in Bitcoin, while PayPal made a bid to buy crypto custodian Curve. Citi noted that Bitcoin's future is still very uncertain, but that it's on the cusp of mainstream acceptance. The institutional investor interest is driving broad interest in the cryptocurrency, but issues over custody, security, and capital efficiency are still headwinds from a digital asset, noted Citi. So guys, let me know down in the comment section below, do you think Bitcoin is future? For more interesting content, give this video a thumbs up and don't forget to subscribe to the channel for more awesome and interesting videos related to Bitcoin. Have a nice day, and I will see you in the next video.